I actually think we could get that at 1,200.
1,200?
Yeah. I think it's that far out of whack. 1,200 would be below historic.
There's people right now who are going to hear you say that, and they're going to go shut their computer and go for a walk outside.
Well, this next recession will be a killer because we have too much debt. The Federal Reserve has no ammo to fake our way out of it. Those four or five things that occurred momentously over the last 40 years that won't repeat. One of the things they did is they created an equity market. There was this relentless series of V bounces. So the market would try to correct, and then it would bounce right back. And someone who says that a 20% drop that rallies back to where it was before within a year, if you want to call that a correction, have a ball. It corrected nothing. Precisely nothing. All it did was reinforce the idea that you can't lose investing in stocks. Now, guy you want to pay attention to, very, very off-radar, off-screen, is a guy named Ed McQuarrie at UC Irvine. And he's analyzed markets back a couple hundred years. And he talks about, equities and bonds. They break even. Ben Graham said that too. They break even. If you take the bond market disaster post-World War II, you omit a couple of decades there, the 200 years, equities and bonds tie each other. And Graham said anyone who thinks equities necessarily beat bonds in return is delusional. Now, maybe things have changed now, but regression of the mean will occur. It always does. And if you look at something that's way, way, way off any sort of historical metric, I don't know when, but you got to assume it's going to regress. The bet as to when is dangerous, but to bet that it won't regress, that's the most dangerous.
Yeah, it's the mean for a reason, right?
Yeah, In fact, what the Fed has done is prevented it from ever going below the mean. The markets weren't even that cheap in 08, 09. Mm-hmm. They were below fair value for about a month. And I said that when I was at a dinner with Mark Spitznagel, who's one of these deep Zen types. And he concurred. And Jeremy Grantham, too. They both said, look, they were below fair value for the shortest period of time. Mm-hmm. So if the horrific collapse of everything caused the markets to spend a month below historical fair value, what did you correct? Mm-hmm. And people, when the markets were down 20%, people would ask me, colleagues, the markets are down 20%. I'm getting real nervous. I said, okay, if a year and a half ago, I told you that you would not make any money over the next year and a half, would you have shit your pants? The answer is no. They'll say, yeah, that would be fine. Well, I said, that's what you just did. But the message also is we haven't corrected anything. We unwound a year and a half of fraud. Mm-hmm. We haven't even gotten back to I'm not even sure we're back to the pre-COVID peak, which was already a disastrously high peak. And so I think we're going to unwind. I think the S&P is going to unwind sub 2000.
Hey, you, did you like this video? Great. Make sure you subscribe, like the video, and see you next time.